OTQ question from BPP exam kit. And here is the question. Firstly, despite running a successful company, BGM board have often now, yeah, now, firstly, let us look at the question. Despite running a successful company, BGM board have often needed to remind it of some fundamental principles, and you have to explain key concepts. Which of the following statement best defines the external audit? For this purpose, we do not need to look at the scenario. So straight away, look at the options. The external audit is an exercise carried out by auditors in order to give an opinion on whether the financial statement of company are fairly presented. Yes is the right answer. External audit is carried out by external auditors who are independent of the company so that they can provide an independent opinion on whether the company financial statements are prepared in all material respects in accordance with an applicable financial reporting framework. The principal aim of the audit is not in relation to the control system in place, although deficiencies and recommendations may be suggested by the external auditors as a byproduct of the external audit in a report to management at the conclusion of audit. Number two, the board has uh, also struggled to differentiate between their responsibilities and those of external auditor in circumstances such as the prevention of detection of fraud and error and compliance with regulations. Which of the following statement best describes YST responsibility regarding BGM compliance with hygiene regulation in line with ISO 250s of laws and regulation in an audit of financial statements? Okay, again, it can be done by without looking at the scenario. So why STN company should actively prevent and detect non-compliance with the regulations? Why STN company should perform specific audit procedures to identify possible non-compliance? Yes, B is the right answer because ISA 250 distinguishes between regulations which have a direct effect on the financial statement in the sense of directly affecting the determination of balances, and those which do not have a direct effect but can still have a material effect, such as an operating license. The hygiene regulations do not have a direct effect, but they may have a material effect. The external auditor must therefore perform audit procedures to help identify non-compliance which might have a material effect on you know material effect on the financial statements, that is, any breaches of the hygiene regulations that could result in material fines or restaurant closures. Okay, so number three, the partner responsible for the review of hygiene compliance has informed you that the engagement is an assurance engagement. Which of the following would not have been relevant to the partner informing this opinion? The existence of a three-party relationship? No. The existence of suitable criteria? No. The determination of materiality. Why so? Because this review engagement is an example of an assurance engagement. There are five elements to an assurance engagement: criteria, report, evidence, uh, sorry, criteria, report, evidence, subject matter, and three-party relationship. Okay, that is CREST. Now, the partner responsible for the review engagement has asked you to tell him what level of assurance you believe YST company should provide and also what type of opinion the firm should give. What is the level of assurance and type of opinion that can be provided on this review engagement? Okay, now move ahead onto the scenario. You are an audit supervisor of YFN and work on the external audit of BDM company and listed companies. Since our firm was appointed an external auditor 2 years ago, BGM owns the chains of 9 restaurants and is a successful company. BGM always been subject to national hygiene regulations, especially in relation to the food preparation process. Non-compliance can result in a large fine or closure of the restaurant concerned. The board of BGM have recently notified you that the hygiene regulation have been updated and now much more stringent. With this mind, the board have asked your firm to conduct a review of the compliance and in order to board assess or advise of it. Okay, now, right. So here is a question. Uh, Reasonable assurance and reporter wording positive no, reasonable assurance and negative no, limited assurance and positive, limited and negative. D is the answer because review engagement, such as a review of compliance with hygiene regulation, is an assurance engagement where the practitioners carries out limited procedures on BGM internal controls relating to hygiene uh, compliance. As the procedures are limited, the practitioner will gain only enough evidence to provide a negative expression of opinion. This means the practitioner gives assurance that nothing has come to this or her attention, which indicates that BGM internal controls relating to hygiene compliance are not in all material respects compliant with national regulation. 5. Uh, the audit partner has told you that the independence threats arising from YST company performing the review engagement should be monitored carefully. So, which of the following is likely to cause the audit partner most concern? According to ACCA Code of Ethics and Conduct, YST and companies prohibited from providing other assurance services to an audit client. No. The review engagement is likely to give rise to a self-review threat as the outcome of the review could form the basis of the financial statement which the audit team will audit. No. The lucrative nature of the review engagement may make the external audit team less inclined to require management to make adjustments to issue a modified audit opinion for fear of losing the review engagement. Yes, C is the right answer in this case because the fees from the review engagements are likely to be very lucrative. Is there is a risk that YST and Co will not seek adjustments during an external audit process for fear of upsetting the board of BGM company and losing the review engagement work. So the provision of non-audit services to unlisted audit client is not specifically prohibited, while YST and Co should be alert of some self-review threats. In this case, it seems unlikely. The scenario states the review engagement does not include the provision of accounting advice for the preparation of figures in the financial statements. A firm is not required to turn down work when a 15% limit is exceeded. Where fee income from a listed audit client is expected to exceed 15% of the audit firm total fee revenue, this should be disclosed to those charged with governance and separate review. May be required. However, the 15% fee cap is not a major concern to YST in this instance because BJM is unlisted, right? So far so good. Now we have next scenario. So one of the shareholders who is not an executive director has heard about Konai plans to establish an audit committee. He has drawn up a list of statements which he feels the board should review before making any decisions. Which two of the statements made by the shareholder are true in relation to the establishment of the audit committee? Uh, the remaining shareholders who are already executive should be appointed as non-executive director and should part of no. The chief internal auditor should not be part of the audit. Not be no. Establish an audit committee will mean that there is a specialist group of individuals which is responsible. So yeah, this one is right. Sorry, and and third one is also right. The audit committee should be form of independent non-executive directors, and so the remaining shareholders should not be appointed to the audit committee. So 2 and 3 is the right one. Although the existence of audit committee may result in more efficient external audit, there is no direct link between the existence of the audit committee and the audit fee. Now, next one. Once established, the audit committee will have many objectives. Which of the following does not form part of the audit committee's objectives? Safeguarding the privacy of whistleblowers. Well, this is the objective. Appointing the external auditors. Yes, this is not an objective. Okay. So the audit committee will make recommendations regarding whether the external auditor is reappointed or whether an alternative audit firm should be used. However, the external auditor is actually appointed by the shareholders at a general meeting of the company. Uh, Number 8. The Konoi company's internal audit department is currently not well understood or supported by the board. Which two of the following statements describe the main advantages of establishing an audit committee? The position of the internal audit department will be strengthened within the organization. Yes, this is right. Corporate governance will be enhanced as a no. The effectiveness of the internal audit department will be improved as the audit committee will monitor and review its performance on a regular basis. Yes, this is the right one because Kanoi internal audit department is currently poorly supported and reports directly to the board, which does not understand its report. Establishing an audit committee will strengthen the position of the internal audit department by providing a greater degree of independence from management. The audit committee will also monitor and review the effectiveness of internal audit. The audit committee should report to the board as it undertakes task of the behalf of the board as opposed to the board reporting the audit committee. Although the audit committee provides an internal independent channel of communication between the external auditor and the board, it is not involved in planning the external audit in any way. Okay. Which of the following statements best describe why having an audit committee could help Kanoi raise additional finance by addressing the concern of the bank? So, the independent non-executive member of the audit committee can provide guarantee to the bank. No, the audit committee will have at least one member who has relevant financial experience. This person will be able to stand in as for Kanoi's finance director before a new finance director is appointed. Yes. Uh, so the audit committee will have at least one member as a relevant so that they can monitor not this one, sorry. The audit committee will have at least one member who has relevant financial experience so that they can monitor the integrity of financial statements. Now, this is the right one. Economic finance director has left and not yet been replaced. It appears that no one else has appropriate financial reporting knowledge required by Kanoi. The audit committee should contain at least one member who has financial experience so that they can monitor the integrity of the financial statement. This may give the bank the confidence they need before they lend Kanoi the money. Guaranteeing the loan or standing in as an internal finance director are not acceptable options as they will impair the independence of the audit committee. Substantiating evidence for information used in financial reporting is a function of internal audit, if not the audit committee. Uh, Next one. RWG and Co. Kanoi external auditor believes that Kanoi establishing an audit committee would bring the external auditor additional benefits. Which of the following is not an advantage to RWG and Co. of establishing an audit committee? Uh, RWG would able to report its audit findings and recommendations to an independent subcommittee. Now, RWG that above one is the advantage. RWG and Co would have subcommittee which could raise issue. It is also advantage. The audit committee will support RWG and Co viewpoint in the view of disputes with the management of Connoy. Wrong. The audit committee will be an impartial platform for the external auditors to raise issues they have not been able to resolve with Connoy's management. However, RWG and Co cannot assume that the audit committee will always support its viewpoint. So far, so good. Let's move to the another question from 11 to 15. From a review of the information above, your audit assistant is highlighted. Okay, now let us look at the scenario over here. The following scenario relates to question 11 to 15. Okay, you are an audit manager of Ali and Cohen and have been assigned the audit of Star Company. Star, a listed company, provides investment advice to individuals and is regulated by the relevant financial conduct authority. Mr. Day, a partner in Ali and Co, has been the audit engagement partner for Star for the previous 9 years and has excellent knowledge of the client. Mr. Day has informed you that you would be his daughter Zoo be a part of the audit team this year. Oh, Zoo is currently studying her first set of fundamentals papers for her ACCA qualification. In an initial meeting with the finance director of Star, you learn that the audit team will not be entertained on the yacht this year. Instead, has arranged a balloon flight costing less than one tenth of the expense of the yacht and hopes will be acceptable. Ali and Co has always carried out tax advisory work for staff. That advisory services do not have impact on the figures reported in financial statements. Finance director has stated that he feels strongly that the firm that offers taxation service this year should charge a fee based on a percentage of tax saved. He also trusts that your firm will accept a fixed fee for representing stock in a dispute regarding the amount of sales tax payable to the taxation authorities. Uh, From a review of the information above, your audit assistant has highlighted some of the potential risks to independent in respect of the audit of stock. Mr. Dave would like his daughter to be part of the audit team to be offered a balloon flight, tax fee to be based on a reverse percentage of tax save, firm to represent stock in dispute with the tax authorities. Which of the following options has identified the valid threats to identify and allocate the threat to the most appropriate category? So advocacy 3 and 4, intimation 3 and self-interest 1 and 2. No. 4 advocacy, 3 intimidation, 2 and 3 self-interest. Yes, B is the right answer. Including Mr. Day's daughter, who is unusual but should not raise any significant risk to the audit. The gift of the balloon flight represents a self-interest threat. The tax fee represents a self-interest threat, as Alien Go will want to save much tax as possible in order to charge as high tax fee as possible. There is also an intimidation threat created by the request, as the finance director may make Ali and Co feel that it has to accept the method of calculating tax fees in order to keep Stark as a tax client. The fact that Stark expects Alien Co. to represent it in a dispute with the tax authorities creates an advocacy threat to audit independence. Next, in relation to the audit team being offered a balloon ride, which of the following actions should be taken to ensure firm compliance with ACCA Code of Ethics and Conduct? The gift may be accepted as Stark has taken appropriate measures to reduce the value of the gift compared to previous year. The value of the gift should be assessed to determine whether it is of material value of the financial statement. Okay. Uh, the gift should only be accepted if its value is trivial and inconsequential to the recipients. C. D. In relation to the audit engagement partner holding the role for 9 years, which of the following safeguards should be implemented in order to comply with the ACC Code of Ethics and Conduct? An independent review partner should be appointed to the audit. An audit engagement partner should be removed from the audit team but may serve as a quality control reviewer. Ali and Co should not audit staff for 2 year period. The audit engagement partner should be removed from the audit team. Yes, D is the right answer. Staff is a public interest entity. So the audit engagement partner should be only be remain on the audit team for a maximum of 7 years before being rotated. It would also be beneficial for an independent review partner to be appointed by Mr. Day should not take on this role as following rotation. He should have no involvement with the audit client for cooling off period for 2 years. Mr. Dear Daughters, who is currently learning about international accounting standards or auditing standards on auditing. In her studies, she has asked you for clarification of the following, which is the correct order of the following stages involved in the development of an ISA. Okay, distribution of exposure of a public comment, consideration of comments received from the public, approval by ASB member, establish of task force to develop draft standard, discussion of proposed standard at a public meeting, 15432 no, 24135 no, 4512 C is the right answer. This is a process by which the IAASB develop new standards. Last question, Zoo is also concerned that Alienco might breach confidentiality where the audit firm to represent stock in its dispute with the tax authorities. Which of the following statements best reflects the auditor's duty of confidentiality? Um, Auditors must never, okay, auditors must never, under any circumstances, disclose any matters to which they become aware during the course of the audit to third parties without the permission of the client. Auditors may disclose any matters in relation to the criminal activities to the police or taxation authorities if requested to do so by the police or a tax inspector. Auditors may disclose matters to third parties without their client consent if it is in the public interest, and they must do so if there is statutory to do so. Auditors may only disclose matters to third parties without their client consent if the public interest or national security is involved. So C is the answer in this case, because there is no blanket prohibition on disclosure. Is there any general right of police or taxation authorities to demand information? Auditor have an implied contractual duty of confidentiality. There is no statutory duty of confidentiality. So far, so good.